we're joined here today with Alan Brochstein of New Cannabis Ventures and 420 Investor. My good sir, how are you doing today?
It's good to be here, enjoying the holiday in the United States.
Yeah, I get a little bit of a day off. What is it again? Is it Martin Luther King Day or?
It is. It's Martin Luther King Jr. Day. One of my favorite people. I have to admit, I didn't know that much about his life until more recently, but really an inspirational person.
Very much so.
I think he would have been in favor of legalization.
Yeah. Well, now it is. We're going to be talking about things from legalization on that day. We're also here with Steve Meisner. There's going to be three of us today.
Awesome.
Nice to see you, Alan.
Good to see you again too, Steve.
So, Alan, why don't we start off with the fact that just over, I believe it was the weekend or last week, you were at Benzinga, a huge conference. Yeah. How was that?
It was, the bar was very high after the Toronto event last August, which was, many people said that was the best cannabis conference for investors yet, and it was even better this time. Maybe being in Miami helped, but I think there were about 700 people, some great companies, both sides of the border, attendees from both sides of the border, and even beyond. I was standing there at a cocktail party listening to a deal get done between a Canadian clinic operator and a Brazilian company. So just lots of stuff going on.
Great networking at those conferences.
For sure.
I know that with James you've spoken in previous recent interviews about trends for 2019, but each time you go to a conference, you're picking up new information. What are you? Did any trends kind of more solidify for you, Alan, this time at the Miami conference?
So I think there was maybe a little bit more of an American flavor this time, and at the time of the event in Toronto in August, we had some American multi-state operators or MSOs, but subsequent to the event, a whole bunch of them came public. So I think for a lot of people, including myself, this was a great opportunity to learn about some of these companies. And it's really interesting because if you go back a few years ago, the leaders in Canada were those that could raise capital. They were telling a story kind of on the come, right? And raising capital. And those companies have done really well. Those have actually become the leaders, and partially because they were able to raise capital. And that helped define what was a leader. Well, in the United States, these companies have a lot of revenue. They're already up and running. It's very different from the Canadian situation a couple of years ago. So I think a lot of people, including myself at the conference, had the chance to learn a little bit more about these companies and maybe some of the differences, as well as probably more similarities than differences. But one of my favorite parts of the event was hosting a town hall panel with Acreage Holdings President George Allen, Trulieve CEO Kim Rivers, and Steve White, who's the CEO of Harvest. And for a lot of people, this was really their first time to ever hear the voices of these people. And there haven't been a ton of interviews. We've actually done interviews with a couple of them at New Cannabis Ventures. But for a lot of people, it was really interesting. And these companies, they have different philosophies about capital allocation and about footprint and the race to be dominant in the United States. And I think investors need to appreciate, as we've been talking about, that the United States is a bigger and more promising market than Canada. It's also a little riskier right now because it's federally illegal. And I think investors are going to really benefit from getting to know the differences between these companies. I wish I knew who the winners would be. There's probably 10 to 12 companies that we'll consider the winners. Not all of them are public yet. Some of them are. But I think that was one of the most important parts of the conference.
I think another interesting trend at each of these conferences, the big Vegas conference in November and beyond, I think another interesting trend is not just the issuer side and all the innovations and new directions that the companies themselves are going in the space, but is the attendees on the investment side as the investor interest broadens. Where maybe there's always been a lot of investor interest from a lot of quarters, but some certain segments of the more traditional investment pools of capital have been slower players for obvious reasons, history, et cetera, associated with the space. And I think the broadening of the investor interest, I think, is interesting to watch as the attendance kind of complexion changes and broadens over each conference as well. Did you notice some of that in addition?
Oh, for sure. This was indeed the case. So I'm always amazed at these people that come up to me and they tell me what they're doing. I've never heard of them before. There was one example of a I don't think they're a REIT, but a real estate lender that said, and she said they have $1.5 billion to deploy into the space. I'm like, do you mean that's how big your company is? She goes, no, that's how much we have for the cannabis space. And they're just getting started. So that was an eye-opener to me. But so I also ran into somebody from Benchmark. And I think Benchmark may already have started to cover the space. On this side of the border, we don't have a lot of coverage from analysts. And Benchmark is like the middle tier. I hope I'm not insulting them, but they're not Merrill Lynch. They're, I think, the middle tier, similar to most of the investment banks covering the LPs, and they seem to be moving forward, rolling out coverage. And it's a little bit different here because in Canada, obviously, they're going for banking fees, and they can't really do that. So maybe they're just taking a longer-term view. But I remember from my past life, Benchmark covers mid-cap and small-cap companies and did a good job. So it was kind of exciting to see them. And there were a lot of examples of people like that at the conference, more ETFs coming, for instance. I was speaking to some people about what's going on there. So yeah, it's a good observation. It wasn't just the company side, some very interesting investors there as well.
Terrific.
Yeah, and I love the point that you were saying earlier because it's true. I mean, up until 6 months ago, we knew cannabis companies in the United States were obviously there, and they were getting a lot of revenue. But I think this last half year, and your ranking system on new cannabis ventures, you can go right on there and you can see it really coming to fruition. It's amazing how many of these cannabis companies that not many people were talking about earlier, you said some of them, Trulieve, Cura Life, they're having some significant revenues coming in quarterly that are upwards of $20-25 million USD. It'll be really interesting as you start seeing, maybe states start opening up or we start loosening a little bit of legalization in the United States, but just in general, as they continue to grow in Nevada and California and states like that, it truly is remarkable how big of a marketplace that they are in. And I don't really think that investors have clued into that. Like I know you have, other investors are starting to move some capital over there. I think people are still giving them, the second look or not giving the second look. Why do you think that is? Why don't you think that we could see, look at the revenue they're making, they're in California, that's massive. Why aren't we looking there yet?
Yeah, well, so I think you're right. Once I started putting that up on the ranking page, it was kind of an eye-opener just to see these big numbers. But what's even bigger than what's being reported now are the projected numbers. And I think a lot of people think they're bogus. But, and I'm trying to wrap my head around, how realistic these projections are. Some people say that they're a little aggressive, and they may be, but they are very big numbers. And I think right now when people are looking for revenue growth, there's some low-hanging fruit. It's pretty obvious that Canopy Growth and Aurora, CannTrust, Afria, Organigram, these ones that are operating in Canada that have kind of a hockey stick here as Canada's legal revenues or adult use revenues kick in, kind of obvious, but maybe it's not so easy to visualize that in the United States. And take for example, I'll pick a good one, Harvest, which they've gotten almost all the revenue from the Arizona market and some from Maryland. But now they have Massachusetts coming on, and they have Pennsylvania coming on. So for a lot of these companies, they actually have good visibility into store openings. What they don't know is exactly how those stores will do. So I think, investors, I've learned this, we're still a retail-oriented market. There aren't a lot of analysts out there putting projections on the U.S. The companies are issuing some guidance, though. And I think investors are going to be slow to get on board. They're going to want to see the prints. And I think right now maybe they're distracted a little bit by some of the big numbers coming in Canada in the very short term.
Alan, another trend that we're seeing evolving now is that a number of companies are coming with debt offerings as opposed to equity offerings. Now that may be easily reflective of the correction in share prices in the broader markets and in the cannabis space that we saw at the end of the year recently, but we are seeing more debt deals come to market. Would you care to give your views on that?
Yeah, I've watched this play out for a while. There's always been the convertible debt deals. The terms are getting better. There's now also obviously some fixed debt deals as well. And it's interesting to hear like Cam Batley talk about their perspective on the debt versus to hear some bearish perspective. Oh, it's dilution, and Aurora pitched this as like, we look at this as low cost financing. And I was kind of critical of the Canopy Growth convertible debt deal when it came out, I guess early in the summer, because if you do the math, they're giving away a very expensive call option, but they also have the ability to repay in cash in both those cases. So I think it reflects the maturation of the market. We're actually seeing some debt deals get done in the United States as well. Interestingly, it's not bank debt necessarily. Well, it's not bank debt. So I think this is a positive for the overall market. It's nice to have these different capital structures. I would say, the convertible debt's not new at all, and it's for some companies, it's been a way of selling forward equity, and it's worked out because the market's moved in the right direction. I always caution people at 420 Investor to be just a little bit concerned because, like, for instance, I was looking at Organigram, which is one of my favorite companies, I'll say. And I was looking at it near year end with the depressed price, and I'm thinking to myself, wow, I really have to think about this convertible debt because unlike the Aurora deal that had a 5-year term from last week, I think that one matures in less than a year or something like that. It'll be within a year. And so it becomes a little bit risky. And the risk isn't necessarily insurmountable, but, let's just make up a hypothetical. Let's say that Organigram was plugging and chugging along, and then the myclobutanol issue were to hit. Then that could be problematic. So I think it's when unexpected things happen that it might hurt some of these debt issuers. And the equity holders like it because, especially if the straight debt, it's not dilutive, right? But at the same time, it's very dilutive in a downside scenario because you risk, as an equity holder, having your company stolen from you by the debt holders in certain scenarios. So I don't want to alarm people, but it is something. There's no free money. That's the point I would make. And while it's good to see this playing out, it also can be risky. It can cause some churn in the stocks. Supreme has been a big issuer of convertible notes over time, and it's paid some off and issued new ones, and it's worked out really well. I've actually had some debates historically with John Fowler about it, and it's worked out, no doubt, it's worked out. But you can imagine kind of the price it may have taken on the stock. It's kept that stock less volatile, more stable is what I meant to say, as there's been this churn of the convertible notes converting out. So I think there's pros and cons, and everybody just needs to realize there's no free money.
Mm-hmm. Yeah. And on that note as well, I know you follow Organigram very, very closely. You have a relationship with their management team. I think it was earlier today. There was something coming out saying that the class action suit was going to move forward. It's been almost 2 years now, and they've already suffered their share price coming down. It's recouped very nicely since then. I believe they actually just got their organic certification back, or at least the beginning steps of that. Do you think there's much in that lawsuit still? Do you think there's still something that investors should be a little bit worried about, or do you think it's smoke and mirrors at this point?
Yeah, I don't know. Honestly, my understanding of Canadian law is it's not like the U.S. If this were in the U.S., I'd be really worried, right? Because, what state is it in? What's the jury like and all that? But my understanding is in Canada, it's not the same thing. And they have their regulator on their side, which I think makes it really difficult. So if I understand the issue correctly, it's more about, was it fair that they were not given their money back and were just given credits? And so I think from an investor standpoint, this can be quantified. And yeah, it would stink to lose, $4 million or whatever the number was. I don't remember off the top of my head. I think that might be it. But it's not the end of the world. They have, tens, if not more than 100 million of cash. Some of it's committed. But so I don't think it's really an issue. But I'm not an expert in the laws. But my understanding of class action lawsuits in Canada is they're not like they are here.
No, nowhere near it. And it's been, we actually saw some Twitter posts, people saying, man, things really run slow in Canada when it comes to this kind of stuff. But yeah, and I was also reading the news, I think they said that their insurance covers their legal costs and possibly even if there's any type of settlement afterwards, it covers a large part of that as well. So that was the first time I actually read that. I didn't know that personally, so that's good to read as well if you're an organogram investor.
Yep, for sure.
And if you don't mind, I'd like to actually go back on something because, and then Steve had a great question right afterwards. You were talking about low-hanging fruit. Have you ever, what's your exposure into looking into C21 investments, CXXI? I find it really interesting that right now in Canadian dollars, their market cap's, I think, around 40 or 42 million, but they just acquired those two companies in Nevada with like 23 million USD in their 12-month trailing revenue. And they've got two more apparently coming up. Is this one of those examples of a company that nobody is paying attention to, but they should be?
Okay, well, I'm going to confess I'm not paying that much attention to it, so you caught me on that one. I'm well aware of it, and I know they had an LOI to do something in Europe, and that kind of went away. Yeah. Honestly, I follow the market full-time. I know you pay attention to this almost full-time, if not full-time. Getting really difficult to stay on top of all these companies, and I've noticed a few of them coming out with very low market caps, and I don't want to let a diamond in the rough escape. So I'm definitely cognizant of the potential of that. C21 is not alone. There's some other ones that have revenue, low market caps, and have done some acquisitions or expanding into multiple states as well. And so I think this is a great opportunity for investors in general, not necessarily in C21, because I can't really say, because there is a lot that's falling between the cracks right now. And so there really could be. One that jumped out at me, Planet 13, had caught my attention. And, I was kind of aware of some of the positives and maybe one big negative about it. And the stock went from below $1. And the day that it was below $1 was the day that they announced their revenue, 2 quarters ago, I think. And I had to add it to my list at New Cannabis Ventures for the revenue ranker. I was like, oh, they made the list. And sure enough, the stock took off. It was like a 200% or something like that. So it kind of tells you that you can do your work on these companies, get to know them, and maybe when they show up on other people's radars, you'll get that big run. And I think the thing that's going to put them on people's radar is probably the revenue generation, not so much doing an acquisition, this or that. We've seen a lot of companies make these announcements about these deals, and then you look at their financials 1 or 2 quarters later, and the deal's closed, and it's just not that material in terms of what's going on. So to the extent C21, for example, is able to convert the deals that they've done into revenue, let's say of $5 million a quarter or more, that'll capture people's attention, that's worth your time looking into that.
Yeah, and I agree. I mean, I started realizing how many companies were coming in this. I used to know all of them, and now someone said, "Have you heard this before?" No, I haven't. Heard that? No, it's funny how this company actually I found out 4 or 5 days ago. Someone just randomly put it into one of our chat rooms, and I saw it. I'm like, okay, so I'm looking into it. So they're out there. I agree. It's getting harder and harder though, because there are so many of them. So it's that much more important to find the good ones, which on your platform I know you do all the time.
It's fine, but I mean, I'll admit I may miss something. It's very likely, I would say, not only possible, it's likely. It's getting more and more difficult. I've hired somebody to help me, and hopefully there'll be more of that. But there are a lot of public companies, probably way too many, but some of them I'm sure are better than we think, and a lot of them are probably worse than we expect.
It's a good example, though, gentlemen, that doing your homework and finding fundamental value can, regardless of the sector, can reward good dividends on any stock picking.
Yep, for sure.
Yeah, I couldn't agree more. And you know what? It's one of those times we're going through, I wouldn't say a slow period. January's been pretty nice to see things start coming back together in January with the indices as well, just the overall market. But I think there's more of these. There's more of these down in the roughs, and I think a lot of them right now are in the United States because there still isn't enough eyes looking over there. So I know you have shifted your focus. Your focus has been there for a long time, but really started pounding that hammer as of late. I think that's correct because I think there are a lot of companies where you're like, what do you mean this company's doing $20 million in revenue a quarter and they came out of nowhere? So I'm looking forward to finding more of those, hopefully before everyone else.
So a company like C21 or one like that, one of these diamonds in the rough, there's not only the exit strategy of other people learning about it. I mean, there's a voracious appetite for M&A here. So to the extent somebody can put together a portfolio of assets that appeals to another strategic buyer, there's a quick exit strategy. So that'll be interesting too. And I think when we start to see some of that, people will spend more time on some of these smaller, less known companies as well.
Yeah, and that's a great point as well, because they're going to start looking for people to start swallowing up so they can grow faster, kind of an ACB model or Aurora model where they're out there, and that's exactly what they're saying they're going to do. They're going to go out there, they're going to grow through M&A, and I think that's still yet to come. It's exciting. There's a lot of companies out there. We just got to try to hopefully find them before everyone else does.
Yep.
As long as the M&A transactions are accretive, and we have had an adjustment in some of the stock values, both the target companies are cheaper, but also the potential acquisitors' share prices have pulled back a little. So as long as it's accretive, the market will like it.
Yep.
Absolutely. Well, Alan, always a pleasure. I've watched your work, read your stuff for about a year and a half, 2 years now. Always a lot of good information there. Appreciate it very much. All of our visitors right now, you can go to newcannabisventures.com, see all the work that's going on down there as well, and 420 Investor as well.
Thanks for having me on, guys. Enjoy the rest of the week.
Nice to see you, Alan.
Take care.